crop insurance, and then a little bit of record keeping through the transition process, and all of that. So I am Megan Vaith, and I am the owner of Northbourne Organic Crop Insurance, which we'll get a little bit more into in a little bit. And this is...
My name's Petrehn, and I work with Dakotas Best Seed and the organic farm team. Thanks.
And here, I guess, is kind of the overview of what we're going to talk about today, which I just went over. So I guess I got a little bit ahead of myself today. So Northbourne Organic Crop Insurance is a member of the organic farm team, which you can see all the different aspects that we have listed here. And May also leads our Transition Toolkit program to help transition farmers through the certification process and then beyond. So here's the different aspects that our team offers, basically covers anything an organic farmer would need. So here are the topics that I plan to cover for today. So first of all, I want to go over some of the crop insurance changes for the 2021 crop year, as this is brand new information for farmers for this year. And then I want to talk about some insurance options or maybe advantages that organic farmers have versus the conventional farmer, which helps separate the two. I have a little bit of information on the transition period, and then May is going to kind of take over at that point and talk a little bit about transitioning into organic. And then we have some record keeping tips and tricks. We hope to have an open discussion and maybe some time for networking along with it. So before we get started too in depth, we want to just kind of point out maybe how you can converse with us. So if you haven't been around for Zoom meetings, which I feel like have all been doing a lot of lately, you just kind of hover your mouse over this screen to get the different options available. And on there should be a chat button. And so within that chat button, you can click that and then you can type to all of us for questions that will come up, and we'll have some stopping points throughout the presentation to kind of go over some of those questions, or if you'd prefer to have more of a live conversation about it, just type in the chat feature that you'd like to have a live conversation, and then we will be happy to unmute you and kind of go from there. Okay. Yeah. Okay, my clicker is not wanting to work, so just give me a second. All right, so before we dig into the very exciting world of crop insurance, I wanted to give you a little bit of a background on myself. So like I said, my name is Megan Vaith. I was raised on a farm in Northwest Iowa where we had corn, soybeans, and then a hog confinement. From there, I went to South Dakota University, where I graduated with a degree in ag business, leading me to my first job as a crop insurance agent.
Just for starters, I cannot hear these people.
With my husband's family, where we grow crops and then cattle as well. And recently, I kind of took a look at the crop insurance industry and realized that organic farmers were not well represented. It kind of seemed like every agent had just a handful of organic policies that maybe weren't getting the attention they needed, because all of the majority of the business was focused on the conventional farmers. So that's where their concern was. So because of that, I created Northbourne Organic Crop Insurance so that organic farmers could have someone, that just understands what they're talking about and can advocate for them in the future for different crop insurance policies that are available. Okay, so the first change that we are going to discuss today is on prevented planting coverage. So hopefully we don't have to use this anytime in the near future, but it's still good to know about just in case. So before we dig into the details, I kind of wanted to do an overview of how to even qualify for a payment. So the rules for this is similar to replant coverage, which most people probably have more experience with replant than prevent plant. But the rules are similar, where you have to meet the 20-20 rule. And by that, I mean you have to meet at least 20 acres or 20% of your unit has to be prevented from planting. So by unit, I mean whether it's optional units or enterprise units, however your operation is set up. And I kind of have those listed on the screen there. One of the big changes for the 2021 crop year is that they expanded the 1 in 4 requirement, which has already been in place for the prairie pothole region. And that means that a crop must be planted, harvested, and insured in one of the 4 most recent crop years in order to be eligible for a prevent plant payment on that specific field. It kind of goes acre by acre, but you need to make sure that you have history of crops being planted on that field before you can collect a prevent plant payment. I know this has been an issue here in South Dakota, so I just kind of wanted to bring it up that now they made the rules nationwide on that, which is pretty nice. Another big change for prevented planting, which I have an example on the next slide, but is that they are allowing more flexibility to have 2 crops reported within the same field between prevent plant and planted acres.
I don't know why.
So here's an example where a producer had 100 acres of soybeans planted, and then he had 22 acres that he couldn't get planted. So this situation is where the farmer initially wanted to plant corn into the entire field, but then it was too wet. So then it got kind of late in the year where it was too late to plant corn, and he ended up switching to soybeans on the acres that were dry enough to actually plant. In the past, how this would work is if you didn't have a 2-crop history, meaning you could prove that you had both corn and soybeans planted in this field within the last 4 years at the same time, he would have to count those 22 acres of prevent plant as prevent plant soybeans. With the rule change, with the more flexibility, they are actually allowing that as long as you can prove that you intended to plant corn, you can actually claim prevent plant corn on those 22 acres. So in this example, the producer had seed receipts to prove that he intended to plant corn on these acres, so he can claim the 22 acres as prevent plant corn. Now, if you've had prevent plant in the past, you know that prevent plant corn typically pays out quite a bit higher than prevent plant beans. So this is actually a really big change that could really benefit the farmer in the long run.
You just gotta hover over that bottom part and then it'll switch.
A new option for farmers to purchase this year for crop insurance is enhanced coverage option, otherwise known as ECO. So this is an area-based coverage. So everything like the yields and all of that will be based on how the county does rather than the individual producer. That kind of makes it similar to supplemental coverage option, which has been available in the past. Except the biggest benefits to this is it offers higher coverage ranges, and you can actually sign up for ECO no matter what farm bill program you end up choosing, where supplemental coverage option had restrictions on that. So as you can see on the chart, this policy covers from 86% of your coverage all the way up to either 90 or 95%, whichever one you end up deciding to go with. So in reality, you really could just have a 5% deductible on your crop insurance policy, which is pretty high coverage. So that's kind of nice that they're offering a new option for farmers this year. If you want to purchase ECO, you have to do so by sales closing for that crop, which is March 15th for most crops. So that's why I have that date listed there. And the coverage on this follows your underlying multi-peril policy, but I have an example on the next slide here. So here's an example for how the policy might work for corn coverage. So for this example, I used a spring crop insurance price for organic corn of $9.10. So this is just kind of my best guess for where it'll come at for this spring. Not a number that's set in stone by any way, but just my best guess. And then this farmer in particular has an approved yield history on his corn of 150 bushels, giving him total coverage of $1,365. You then take that amount and multiply it by the coverage band of 9% in this situation, because this producer did the 86% to 95% band, giving him $123 of insurance. So this farmer cannot collect more than $123 of insurance on this specific policy. So how you calculate the trigger revenue is you take the $1,365 multiplied by the coverage level of 95% to get the total trigger revenue of $1,297. Then it comes harvest time, and we see that the price dropped a little bit, which we see quite often with harvest prices. So the crop insurance price went from $9.10 to $8.91, and the yield dropped a little bit as well. So the county yield came in at 140 bushels, making the total harvested revenue $1,247. Or in other words, it triggered an indemnity of $50 per acre in this situation. One thing that I think to keep in mind specifically for organic farmers is most counties don't have enough history just on organic grain, that they are usually taking the conventional yields and then taking them by a factor to reduce them to come up with the organic yield for the year. So if the conventional corn in your area did really well for that specific year, you probably won't collect on this policy. And one thing I really want to emphasize too is that this is an area-based coverage plan. So everything is based on how the county does as far as yields. So if your yields do poor, but the county does well, you will not trigger a loss on ECO, but you could still trigger a loss on your standard multi-peril policy.
Got a question here from Jack. I think I'm gonna try my best to read this right. Looks like you're wondering if there's other ways to prove prevent plant other than a seed purchase.
There are going to be other ways. This is brand new, so they haven't quite figured out all the rules and restrictions on it. The hard part with crop insurance is a lot of it is based on the adjuster, so what the adjuster sees as fit. But yeah, there will definitely be more ways than just seed records to prove it. It just seems like that's probably the easiest one to prove it on.
Hopefully that answered your question, Jack. Feel free to keep chatting with us. Otherwise, we'll take more discussion here in just a couple minutes.
Another new option for producers this year, which was available in the fall, so you might have heard a little bit about it already, is quality loss option. So this option helps improve your APH and keep it higher, even for years that you might have suffered a quality loss on your crop. I have an example on the next slide, but how it does this is it replaces your post-quality adjusted production with what your true production was before they adjusted it down. So in order to be able to kind of substitute your yields as what the actual production was, you have to have a notice of loss filed in that year, and then you have to have the records to be able to prove what your actual yield was. And you can actually go back as many years as you want on this, as long as you meet those requirements. The biggest advantage to quality loss option, in my opinion, is that you only get charged premium on it if you actually use it on your policy. So if you haven't had any quality loss issues in the past, you might think it might not be worth adding to your policy. In my opinion, since you're not getting charged any premium on it, you might as well add it now while it's available and just keep it on there in case in the future you have quality loss issues. Then it's just in place in case you want to use it in the future. So here's an example on winter wheat and how it can impact you there. So I used winter wheat for this example because it seems like there's more quality issues on winter wheat than any other crop. And by quality issues, I mean it has to be like a disease or something like that that is a true quality issue. So like for organic farmers, if you harvest your crop and you had a contract on it and you go to deliver it and they say that it doesn't meet their quality specs and then they dock you for the price, that doesn't actually impact your APH. So this doesn't apply in that situation. So this is truly for, like in this example, if you had vomitoxin in your wheat or something like that. So for this example, the producer had, we'll just say vomitoxin in his wheat for both 2020 and 2017 crop years. Because of that, it reduced his yield down to a 35 bushel average in 2017 and a 40 bushel average in 2020. This brought his 5-year average yield down to a 53 bushel. Since they came out with this quality loss option, he can actually replace those yields with what the actual production was, which was 50 bushels in this situation for both years. So this increased his overall yield from 53 bushel to 58. Now I know 5 bushel might not seem like a lot, but it could actually add up over time with how you trigger claims. So it could really benefit your policy. So if you did have quality issues in the past, this is definitely something to look into and see if it would benefit your policy. So here's an option that is not new by any means, but I feel like it's one of the most beneficial things for organic farmers as far as crop insurance goes compared to the conventional farmer. So I wanted to make sure I touched on it today. So organic farmers actually have the option to insure their crops at the contracted price rather than the spring crop insurance price. So the spring crop insurance price, which is what it typically goes off of, is based on the average price for the February board price that they're tracking. And then they take that February board price for the conventional corn or beans or whatever crop you're looking at, and then take it by a factor. So I looked at what the factor was over the last 5 years, and on corn, it was 2.26 on average. And for beans, it was 1.94 times the conventional price to come up with that organic price. So in order to substitute your actual contracted price in place of that spring crop insurance price, you have to have your contract submitted to your crop insurance agent by acreage reporting deadline, which is July 15th in most situations. So here I'm kind of going to go through an example for how contract pricing might benefit you and how it could increase your yield. So here's a corn example where a producer had 150 bushel average yield on his operation. He has 80% coverage, which gives him a bushel guarantee of 120 bushels. You then take that times the projected price, which is what it would be without a contract. So I use $9.10 in this situation to get a total guarantee of $1,092. Now this producer was able to get a contract for $10.50 per bushel on his corn. Now I know that might seem kind of high and maybe not realistic at this moment, but by July of this coming year, you might be able to secure in a contract that's that high. So using his contract price of $10.50 actually increases his guarantee to $1,260, which gives him a $168 increase on his guarantee. So here's an example of how this might come to play come claim time. So the producer goes out and harvests his grain and gets an average yield of 130 bushels, which still comes in higher than his bushel guarantee of 120. But there was also a price drop. So the projected price was $9.10 on corn, and then the harvest price came in at $8.50. This brought his harvested revenue to 1,105 bushels. As you can see, without the contract price, his revenue was still high enough that it does not trigger a loss. However, since he had that contract of $10.50 and supplied it to his agent and was able to use that price instead, he is actually going to trigger a $155 loss per acre. $155 could go a long way in your farm's financial stability in the future. So if you weren't aware of this and how it worked, this is definitely something to keep in mind as it can make a huge difference on your operation.
I'm going to keep checking the chat box here a little bit. Looks like we have a question from Simeon. Are you bound to contract pricing, or can you still take the fall price if it's higher than that contract price?
That is a great question. Very rarely is the fall price actually higher than what your contract price is, but they do offer a little bit of flexibility in it, where as long as your agent has a good relationship with their underwriter, they should be able to make it work that you can use the harvest price rather than that contract price. I've done it in the past that way.
Yeah, thanks guys. Keep the questions coming in, and if they're kind of
Absolutely.
pertinent to what we're talking about, we'll bring that up. Looks like we have a question here about food grade versus feed grade soybeans. Food grade beans are sold for feed grade. Can you count that as a quality loss?
Unfortunately, that's kind of what I was talking about, where that doesn't impact your APH because your yield is still the same. So the quality loss is really only if there's diseases within the crop. I've seen this a lot of times where, people had to take a dock on their crop because of it didn't meet the producers or the processor specs. Unfortunately, that does not qualify for a quality loss since it doesn't change the APH, and it only really changes what your income is going to be. So unfortunately, no, it does not qualify for quality loss.
Good discussion, guys. We'll keep trucking along here.
And I apologize, my throat's been a little scratchy today, so I have to take breaks for water. So here's an example on how contract pricing might impact you on the soybeans, because I feel like there's probably more price volatility within the soybeans. So here we have a spring crop insurance price of $21.30, which gives this producer overall guarantee $716 since he has an approved yield of 42 bushel. This producer was able to get a contract on his beans for $27 per bushel, which obviously increased his guarantee. Come harvest time, the producer has an average of 40 bushel yield. I apologize, I'm getting my chat a little bit out of the way. The producer has an average yield of 40 bushels, and then the harvest price on the crop insurance stayed the exact same at that $21.30. So since the harvest yield came in just shy of what his average yield was and way above the guarantee, there is no way that this producer would ever trigger a loss without a contract price. But since he was able to get a high contract, he actually still triggers a $55 loss per acre on his crop, even after having what I would consider a pretty good year. So this is a really good example for how contract pricing could benefit you, potentially without you even doing anything different on your operation. All right, and I'm going to check here to see if we had any more questions or discussions. And I think please keep the questions coming in. I think we'll wait a minute or so to see if anything else comes in. Okay. If you still have questions, please keep typing them. We'll address them as we get them. But for now, I think we're going to move on to another crop insurance product that is available. So whole farm revenue protection is a product that isn't talked about very often because it's not very popular, but it could actually really benefit an organic producer. So how it works is it's kind of like an umbrella insurance policy where it can cover every commodity on your farm, even livestock if you choose so. So how it works is the guarantee is based on your whole farm revenue based off of your Schedule Fs. So they take the last 5 years of Schedule F income and compare it with what your expected revenue is for this coming year. They then take the lesser of those two numbers and multiply it by your selected coverage level to come up with what your guarantee revenue is for the year. So in order to purchase this product, you have to have 5 years worth of Schedule F history for that EIN. There's also a leg year within it, so it kind of turns into 6 years because, like for the 2021 crop year, you don't use your 2020 Schedule F on it. So there is a leg year in there. One of the big benefits of this policy is that it can cover crops that other crop insurance products aren't available on. So virtually any product that you could ever plant, you can actually insure under whole farm revenue protection, where there might not be, your standard revenue protection or another type of insurance policy offered, which is why I think it's really beneficial specifically for organic producers. Another big benefit is you can actually get a pretty big discount on this policy if you also purchase revenue protection on some of your crops as well. So for example, if a producer is going to have corn, soybeans, and rye in his rotation for this coming year, and he purchases revenue protection on his corn and soybeans, he actually only has to pay full premium on the rye. So it gives him a pretty big discount, and it is a good way to cover every crop on his operation instead of just those that offer revenue protection in your more common crop insurance policies. Another big benefit to this product is that as long as you insure either 2 or more commodities within your operation, you receive what's called a whole farm subsidy, which is around 80%. So this policy can be pretty affordable and is a good way to make sure that you actually have some guaranteed revenue for the year. On the other side, the biggest downfall to this policy is the amount of paperwork involved. So before you can even fill out an application to sign up for this program, you have to supply your agent with 5 years worth of Schedule Fs, along with an inventory report showing what you had on your operation throughout the start of the year. And then this is kind of a year-long process. So you have to fill out lots of paperwork as the year goes on. So even though it's kind of maybe a little bit tedious with all the paperwork, I really think it's a good way to make sure that you have some guaranteed revenue on your farm. And another big way that it can help organic producers is kind of like what Jack was talking about with your food grade beans maybe not meeting food grade, and then they drop it down to feed grade. So for this product, if you have your contracts in place, you can use your contract price for your expected revenue for the year. And then let's say you go to deliver beans for this example, and they don't meet the specs for food grade, so then you have to take them at the feed grade price. Well, your expected revenue is going to show what your contract was, and then it's going to show that you were kind of missing some revenue because you didn't get every dollar that you were anticipating off of your contract. So this policy could actually kick in there and kind of pay for some of that difference, depending on the situation, of course. But it's just a good way to make sure that you are covered and secure without having to pay too much premium for it.
I was hoping we'd get a question along these lines because I definitely hear it more and more these days. How is a loss figured on a cover crop? And maybe kind of the bigger picture question is who decides when something is a cover crop versus a harvestable commodity?
Yep. So it's hard to track revenue on cover crops is the hard part. So this is all based on revenue. So you'll get to use like your cover crop as expenses on this because it's kind of like accounting where you look at expenses and income. So you get to use your cover crop as an expense, but you don't really see maybe a full dollar amount of income on the cover crop. I mean, there are definitely benefits to it, as we all know, but you don't see a full dollar amount. So really it's kind of, I feel like I'm avoiding the question. So I apologize, but it's tricky because it basically just goes off of what the revenue you earned on the crops that actually are tracked that way. So like harvestable crops.
If you showed a history of revenue on a forage crop that you could say is a cover crop, or you're harvesting it for organic sale, would that influence the discussion?
Yes, then that would work. Another thing too is what you could do if you were wanting to have your cover crops insured on this is you can actually have an adjuster come out and put an appraisal on your cover crop, which will give it a value. So then you would see whether the value was worth what you thought it was at the start of the year. It gets really tricky when it comes to cover crops because there's a lot of variables in it.
Well, and I can say too, Megan and I are both learning from each other. You'll learn more about me here in a minute, but we've kind of come from two sides of the organic coin. And I think we're trying to work together to figure out how can we reduce paperwork on both sides. So, because some of the paperwork, especially for whole farm, sounds like it's directly applicable to whatever records organic producers already need to be keeping.
Absolutely. And whole farm revenue protection can be a pretty complicated product. So because of that, I don't want to go into too many details because I honestly feel like I could do a full hour webinar just on whole farm revenue protection. And we'd like this to be more conversational than that. So if you have questions, feel free to keep typing them in the chat, or you can always feel free to give me a call afterwards today too, and I can discuss it more in depth with you. It looks like we have a couple questions coming in.
Yeah, if we're going to graze that cover crop, how does that factor into the whole farm conversation.
This would be the same type of thing where, you know, if there's enough growth, you could have an adjuster come out and look at it and put an appraisal on it. Otherwise, a lot of producers just don't include it. A lot of times they're going to insure it under a different product, like a pasture rangeland forage or a product like that, instead of this, because the values are easier to track.
Sure. We got to keep on trucking here. We got some more content to cover before we can get too wild and crazy in the discussion.
Yep. So I just have a couple more slides and then I'll let May take over. But one of the questions that we got, I guess, ahead of time when we were asking for the registration is how insurance impacts you for your transition years. So I just kind of wanted to give an example for what your transition insurance looks like compared to what it would be when you are certified organic. So this example is I used Cumming County, Nebraska. And so when you're first starting in transition, you have to use the county T yield that they have listed for organic, whatever crop. This one I used corn. So for this county, their organic transitional, or their organic yield, I guess in general, is 133 bushels on their corn. And most of the time, it's about a 35% decrease compared to what the conventional yield is in that area. So the biggest downfall, in my opinion, to crop insurance during the transition years is you still have to use that conventional crop insurance price, but you also kind of take the hit on the yield decreasing down to what the organic yield is. So in this example, he had to use the crop insurance price, which last year was $3.88, which only gave him total coverage on his crop of about $413. Which seems pretty low and could potentially not even cover all of your inputs. So I think the insurance during the transition years is kind of tough, but on the other end, there is light at the end of the tunnel. So as you can see in the graph, I guess, down below, you still have that same yield of 133 bushels once you are certified organic, but you get to use that organic crop insurance price. So here for last year, it was $8.67. So his coverage actually increased all the way up to $922.50. And that's kind of his bare minimum coverage too, because it can always go up from there depending on whether he has a contract in place or not. So I guess my main message here is that transition years can be pretty tough on crop insurance, but there is light at the end of the tunnel and the coverage is pretty good once you actually get certified organic.
We had a question come in, or just a comment. Megan, I'm curious, have you worked with a lot of growers who are able to get contracts for non-GMO grain? And does that influence any of this in terms of what you can insure it for?
Most often they don't really see it as value within the crop insurance world. So most of the time, like during those transition years, you're still stuck at that conventional price. They kind of just see it as tough years you kind of got to grind through, unfortunately.
All right. Well, looks like we have someone here excited about Cumming County. Is that how you say it?
Well, they would probably know more, but I pronounce it Cumming.
Tell us how to say it later, Herb. All right. So we're transitioning to talking about transition a little bit. I know we have some certified growers here as well as some that may be considering transition.
Yes. So the main point I wanted to drive home on this, and we kind of both have different topics on this, but a lot of times we see a benefit for producers to create a separate entity for their organic acres. And most often we see this when they are just transitioning some of their acres where they're still going to have conventional land and then organic land too, once everything is certified. So on the crop insurance side specifically, I see a huge benefit in creating a separate entity for your organic insurance, because if you have enterprise units on your crop insurance policy, which is where it combines everything together for that crop in the county, which is most common because it's the most affordable crop insurance option, it will actually combine your conventional yields with your organic yields. So as we just saw on the previous slide, your transition yields, and then when you first start out as certified organic, the yields are pretty low until you get enough history built up. So because of that, those yields could drag you down and throw you out of a loss on even your conventional crop, since everything will be averaged together. Another option to get away from it if you don't want to create a separate entity is you can purchase optional units instead, which will keep every section separately, but it can get pretty expensive. A lot of times it's about 2 to 3 times the amount of premium as it is for enterprise units. So a lot of times we see enterprise units as a more affordable and attractive option because of that. So in this situation, I always recommend creating a separate entity for that organic land just to keep it separated out. And I think May has some points to drive home on that too.
Well, and I'm wondering, have you seen scenarios where, a lot of growers, maybe they just want to transition 1 or 2 fields, and then so you ask yourself, is it worth it to go through the process of creating a separate? Okay, yeah. Megan says
in my opinion, it's worth it. Because crop insurance losses can add up really quickly, and it's just not worth taking the risk to forfeit a loss.
Well, and one of the considerations, again, for folks who are in transition or considering transition is once you become certified and you apply for certification with a certifier, you can only register a legal entity that will appear as the name on the certificate. It used to be acceptable to just put, this is Joe Schmo's farm on an organic certificate. And, as a lot of us know, there's been some fraud in the industry, and the National Organic Program's doing as much as possible and kind of adding more every year to reducing the risk of that. And part of reducing the risk to that is that only an actual registered legal entity can appear on your organic certificate. So kind of another reason to do this during transition, or at least before you apply for certification. And just a couple comments here. I do have a lot of conversations with growers that are in the transition process. And, I think because you see such a hit still in those transition years financially, the advice or the comment I always make is to try to keep your expenses as low as possible during transition, so that year 1, when you are first certified, you can make as much income as possible to sort of make up for that. And just a comment again on contracts, the organic industry is growing, but it's still a pretty small world. And we'll talk about kind of my experience with that in a minute, but sometimes contracts are hard to come by in this world still, and it takes some relationship building to get where you want to be.
And before May goes too in depth, there was a point that I kind of forgot to mention. So one of the questions that we had also gotten ahead of time was, like, during the transition period, do you need to work within like organic specialized agent, or are you okay working with your traditional agent that you have been for many years? And here's kind of my take on it, is when you are going through the transition process, you are starting to think like an organic farmer. You're kind of changing your train of thought on everything and kind of how you operate and all of that. So that is the time to start transitioning to your full organic process and what the future looks like for you. So in my opinion, I think that is also the time where you should be looking for an organic crop insurance agent that will understand your operation, be able to answer your questions, and move forward in the future with you. One of the main reasons I say that too is I just started working with a producer over the last year that this past year was his first year as certified organic. So before that, he would have been transitional. Well, during his transition years, he didn't have his acres reported as transition, which can be a pretty big deal. So because of that, he had a claim in 2020. And when they went through the audit to look at the claim, they realized that he never had any transition years, which kind of drew a red flag for crop insurance. So this guy is potentially either not going to collect on his claim that's coming through this year because he didn't show his transition process, or they're going to go back the last couple of years, which should have been reported as transition, and reduce any claim payments on that because he was using a higher yield than he probably should have been. So because of that, I think it's best to just work with a specialized agent that understands what's going on in your operation to kind of avoid pitfalls like that. and having any hiccups like that in the future. That's my 2 cents on it, and I'll let May take over.
I'm sure Megan is full of more stories just like this one. I'm going to kind of go through the rest of the presentation a little bit quicker here, just so we have enough time for discussion at the end here. And like I said, Megan and I are working together to try and reduce paperwork for folks on both sides. So we're working on this project collaboratively, and we're not the only ones who have done something like this before. But we're trying to sort of consolidate some of the records needed. And so basically, this is one example of a form we've come up with, and we're working on more. If you'd like copies of it or have questions or, why aren't you doing this? Please feel free to contact us. You'll see our info at the end here, but just an example of how we feel that some of these things could be done more efficiently. Everybody has their tips and tricks. This is just sort of one of ours right now. Just real briefly, May Petrehn, I've been here with Dakota's Best and the organic farm team through most of 2020. And my background right before I started working with the team here was I was a organic inspector full-time for 3 years. And I've done a lot of traveling and just have a lot of diverse experience in the industry. I haven't just worked with crop operations. I've worked with brokers, traders, poultry, large scale dairy, small scale dairy. So I just have really enjoyed getting a breadth of experience in that world, which is why I still feel like it's a small world. I always make jokes that the Midwest is one big small town because I'm constantly running into people in the industry or growers who talk to somebody else I've worked with. It's just, it's a neat time. So as the great Johnny Cash would say, I've been everywhere, man. These are just a little fraction of some of the operations I've inspected over the years. And I just wanted to share a quick couple of insights about record keeping, somewhat for folks who are certified already, and some kind of insights that are for folks in the transition world. Just sort of my 2 cents as far as, I've worked with growers all the way from, here's my shoebox, ma'am, to, they're tracking their records in the field with technology in their tractor and kind of showing those to me field by field. And, I don't think there's an easy button, but there's ways to create efficiencies. And there's also ways to engage with a consultant or a coach like what I do. Other people do similar things as well. So just kind of know yourself is really one of my biggest points here. Sorry. I always encourage folks to, whatever kind of system you have, try to design your system in a way that gives you information about your business as well as makes you compliant with crop insurance or organic certification. So try to target the way you keep your records to give you more information about your own operation. I can't emphasize this enough for folks in the transition process, and maybe some of the organic folks can share their experience here. It just takes a lot longer than we would like to apply for organic certification. And as someone who worked for an organic certification company for several years, and is now, helping growers and our own seed company here connect with certifiers, I continue to just be surprised at the level of difference in the service, the knowledge, the cost in the organic certification world. And, I'm not here to talk down on anybody in that world. But I'm just here to say, definitely do your homework. Don't be afraid to shop around. Don't be afraid to call another certifier with questions about how they might approach a compliance issue you're having on the farm. There's numerous templates and online systems out there. Some of them are even designed for organic growers. Some of them are designed for more of the horticultural side. Some of them are designed for the row crop side. Some of them try to do both. For folks who prefer paper or are more paper-based, there's just mountains of templates available online. Here's two examples from the CCOF and Caroline Farm Stewards website. Plenty of resources out there for that. As an inspector, I kind of think of things in black and white terms sometimes. This is a list I used to provide growers prior to coming on the farm. And, just one of my tips too is to use this as kind of a checklist for yourself every single year. And however you want to combine or consolidate these records, like the form we showed earlier that we created, it consolidates some of this information. I think one thing I would wish for a lot of organic growers, especially as you're starting out, is try to create a lot numbering system that makes sense to you. It really speeds up inspection. It reduces, the amount of time you're hunting around for paperwork. If you have a lot numbering system, it can be really simple, but I have a fingerprint here because basically that lot number is the fingerprint of your grain as it moves through an organic system. It should appear on clean truck slips, bills of lading, invoices. Some certifiers require you to tell them that you are using a lot number system and to tell them how you break it down. Some certifiers don't. But as someone who's watched a lot of stressed out farmers struggle to find paperwork as I'm auditing crops, lot numbering systems just make it so much less of a headache. That's kind of my pro tips. As Megan mentioned, and as we mentioned at the beginning, I also coordinate the Transition Toolkit program here. If you have questions for me, my contact information is here at the end. And we just wanted to also throw out that there's a lot of resources out there. I've mentioned a few. Megan is going to be part of a roundtable event at the Moses Conference, which is online this year. But why don't you mention something about that?
Yep. So I've been working with Kate Hansen from the Center for Rural Affairs in Iowa and Nebraska, and she's really taken an interest and I guess a project of making sure that farmers are aware of what their options are, organic producers specifically. So she just finished up a case study called Conversations from the Field, Crop Insurance for Organic Operations. And in this case study, she interviewed both crop insurance agents and farmers to kind of see maybe what their struggles were in crop insurance, what special options do organic farmers have, kind of things like that. And I thought it was a really well put together project that she worked on. And that will be posted on their website soon. So I just wanted to kind of give her a shout out and put her website here for those of you that may be interested in that. So that's that cfra.org. And I think that should be up hopefully within the next coming weeks here. And then like May said, she is hosting a roundtable event at the Moses Conference, which I will be heading up with her specifically on crop insurance for organic producers. Just trying to get some good conversation going. Maybe people share their experiences, what's working for them, what's not, kind of get some input and hopefully get some, information that we can take back to RMA, the Risk Management Agency, for further advancements for crop insurance options for organic producers.
When we were talking about this yesterday, who is really advocating for changes that would help growers through the transition
Yeah.
process. And it's really only that we know of, the Center for Rural Affairs, ATRA. I can't necessarily think off the top of my head of anyone else advocating for some reforms in crop insurance, maybe organic farmers.
Yeah. Not many is the bottom line there. So make sure that you're working with people that actually will advocate for you and try to make change happen for you. So that's kind of our message here. And then we put on the link, I guess, for the ATRA calendar. It seems like they have a pretty good overview of events that are going on. I know our Fridays on the Farm was advertised on there, but just some different events for organic farmers to maybe learn more or network or whatever it may be that you're looking for.
And coming up March 5th and 6th, we're going to do our Organic Farm Team Summit. Please check out our website, organicfarmteam.com, for our agenda there. I really am excited about some of the folks that are going to be joining us. Some may still be joining us virtually and doing some virtual talks. We still hope to have quite a few of those folks in person here in our big seed warehouse here in Platte. And next Friday, we'll have a pretty open conversation about considerations for selecting organic corn hybrids, not necessarily just to promote what we're doing here at Dakota's Best and with Den Beston, but just a conversation with two gentlemen that are on our team, our owner Todd Den Beston and Herb Hazenkamp, both with experience in the transition process and organic certification. So I think there's a fun conversation to be had there. We sponsored a conference this week with the South Dakota Soil Health Coalition, and look out or check out the Minnesota Organic Conference, which is all online as well. But they do have a really interesting lineup, and it's kind of in tidbits over the course of the month as well. So plenty of webinars and things to stay busy with this time of year. Yeah, so with that, I guess would just love to have folks throw out any questions. If you want to just type in the chat box, if you want to just say comment, I will unmute you and you can share a story, whatever suits your needs today. I know we have a pretty diverse group here on the line. So I will keep track of that chat box here for just a minute and we'll hang out. We really appreciate you joining us today. And this is just something we're trying. I think a lot of different groups are trying this out. We just really want to be part of a growing conversation here in the sort of Northern Great Plains and the Upper Midwest about organic and soil health and all the various issues that come with that. I think, you know, as someone, I live in Western Minnesota, but as someone who, you know, spent a lot of time at Iowa State and has kept close track of what organizations like Moses are doing, the Minnesota Institute for Sustainable Agriculture, you know, as I've spent more time here in South Dakota, I've been just kind of surprised at the lack of resources and just knowledge as far as extension and, you know, some of our institutions. There's just not a lot of conversations going on quite yet. And so we're just trying to facilitate those. We had a question come in. How does organic seed availability look for 2021? I'll unmute you, Jack, if you want to kind of be more specific. What are you, what kind of seed are you specifically looking for? Or do you have more of a question on kind of the viability of some of the organic seed out there? Oh, we got someone joining us kind of last minute here. Hey, Jack.
Yeah, can you hear me?
Yeah.
Well, it was a generalized question. I just wondered, does your company have more organic corn varieties ready? Is there any problem in the supply chain like there was with alfalfa about 5 years ago? I mean, it's a general question.
Sure. Yeah, we have quite a few different hybrids on both the non-GMO conventional and the certified organic side. So just go to Dakota's Best Seed, go to our website, and you'll see a lot of those. Or I can follow up with you for a catalog too. But we've been working hard to develop that seed program, especially in more of the early day seed. And Todd just chatted me here. We have a complete lineup from 77 to 112 day. I'm not 100% sure where you're located, but I think that's something we're definitely really proud of, is some of our more early day varieties, because there's not a lot to choose from in that side of things.
Well, I've noticed good progress in shorter day corn in the past 5 years.
Sure.
Yeah.
Yeah, and I don't know if you're monitoring the chat, but it looks like Herb also said that we currently have 17 hybrid certified organics available, and a good supply of most of them.
Okay.
We aren't the experts on those topics, if that's not obvious.
Well, and if you join us next week, we're going to go way in depth on some of the issues surrounding organic seed and organic seed corn, because it is a little bit of a complex issue. Yes, please tune in next week and ask your tough questions. I think I had a conversation with Todd just the other day talking about, the sort of loophole, if you will, that allows growers that are certified organic to use a non-GMO seed. And there is some conversations at the National Organic Program level where, that exception may go away. Not anytime really soon, but there is some conversation going on about that. So stay tuned, and thank you so much everyone for joining. We have a lot of shy folks here, only Jack on the video.
Well,
And us.
if the organic seed rule is made stricter, that would just be a disaster for vegetable producers, an absolute disaster.
I can see how on that side of things, it's definitely more complicated, especially since there's just so much more need for a regionally or locally developed varieties there. So definitely a valid point.